Assalamu alaikum. This is Junaid Khalid in front of you. I hope you guys are doing well. Okay, in this video we are going to discuss the important adjustments and the treatment of reconciliation of control account. Okay, there are few adjustments that examiners been testing, and these are the quite simple adjustment. For example, the sales invoice is not being recorded, or for example the invoice was recorded with the lower amount of 2000. So that definitely there's a common sense that if the invoice is being recorded with the lower amount, so we need to increase the amount of control account or the list of balances. But there are few adjustments that is quite confusing for the students, and normally students made a blunder in that particular adjustments. So let me give you the brief introduction of those particular adjustments that proved to be very difficult for the students or the candidates. Let's quickly go through those adjustments and let's try to find out the treatment or the adjustment, that how that or those particular transactions will be adjusted. Okay, we usually receive a transaction. For example, the transaction is the sales day book is overstated. In the last video which I have posted, in the last video I have already detailed that particular scenario I have discussed that particular scenario in detail, that whenever the books of prime entries like sales day book, sales return, purchase return day book or purchase day book is being over or understated or casted, where will be the impact of this error? Where will be the adjustment of this error? Definitely the adjustment will be made in the control account. Why? For that I have posted a complete video for this one. You can view that video and have a good knowledge of it. Okay, whenever the sales day book is overstated, for example overcasted by 5000 or overstated by 5000, so now what will be the impact and how that impact will be encountered? How are we going to rectify this one? Always remember, when the sales day book is being overstated, which means you have made the entry account receivable debit and sales credit with the higher amount. Is it? With the higher amount. You have recorded the receivable. No. You have debited the receivable. You have increased the receivable with the higher amount. So obviously speaking, now in order to adjust or to rectify, we need to reduce the amount of receivable, which means we need to subtract. It means now the adjustment will be made in the control account. Obviously, adjustment will be made in the control account, and how the adjustment will be made, it will be reduced or will be deducted. So that was quite simple, and there was no need to explain this one. Okay, let's move on to the second one. Little bit a more confusing side. For example, a sales return day book or discount allowed, there will be a same treatment. Okay, sales return day book or discount allowed is being overstated or overcasted by $5,000 or for any amount. Okay, now let me tell you the accounting entry for this one. Sales return or discount allowed should have been debited and account receivable should have been credited. Is it? Now if you're saying that you have recorded that entry with the higher amount, it's being overstated. You have recorded that transaction with the upper or the higher value or the higher amount overvalued. Now what happened? Just imagine the background. What went wrong? You have recorded this entry with the higher amount, which means you have credited the account receivable with the higher amount, which means you have reduced the account receivable with the higher amount. For instance, sales return debit and accounts receivable credit should have been recorded with the amount of 500. Now if I say that that amount is being recorded with the higher value, which means the sales return and account receivable has been recorded with the 1500, which means account receivable should have been credited with the amount of 500, although accountant credited that receivable with the 1500. No. Let me tell you in another way. Account receivable should have been deducted with the amount of 500, but what accountant did, it deducted that account receivable with 1500, which means he has deducted the account receivable with the higher value. It should have been reduced with the amount of 500, although it's been reduced with the amount of 1500. Now in order to adjust, we know that in order to adjust, what we have to do now, we will not be subtracting, but we will be adding up. We'll be adding up that amount, which means if the sales return debug or the discount allowed has been overstated, now adjustment will not be subtracted. Now the adjustment will not be subtracted, although we'll be adding up that amount. Reason being, because you have deducted the amount with the higher value. The receivable balance is being lower down, so you need to increase the amount of receivable. You need to remember, we are having a control account reconciliation. We are having the control account reconciliation. Control account reconciliation of what? The control account reconciliation of maybe the account receivable or the accounts payable. We are focusing on the receivable and the payables rather than the sales return or the discount allowed. So what the accountant, we are not focusing the sales return, that what happened with the sales return. We are focusing that what happened with the account receivable balance. It should have been deducted with the amount of 500, although the accountant made a blunder and the accountant deducted that receivable with the amount of 1500, which means we need to add back 1000 rupees, $1000. And obviously this adjustment will also be made in the control account. Okay, so that was the adjustment. Why I'm focusing more on this adjustment? Reason being, whenever we hear about the overstated, whenever we hear about the terminology that the amount is overstated, the possible mathematical sign that comes to our mind, that if the amount is overstated, let's reduce it, let's deduct it, let's subtract it. But it's not the case. You have to see that whether the sales daybook is overstated or the sales return daybook is overstated. If the sales return daybook has been overstated, which means you have already deducted that receivable with the higher amount. So in order to adjust this one, you have to add back. Okay. The third statement, the third principle is for the purchase daybook, and the same principle will be followed now. If you will remember the one principle and the second principle, the other or the rest of the principle will be automatically be remembered. Okay, if the purchase daybook is being overstated, now let me tell you the accounting entry for this one. What should have been the accounting entry? That is the purchases debit and accounts payable should have been credited. Purchases debit and accounts payable should have been credited. And if you are saying that you have overstated that amount, which means you have recorded the payables with the higher amount. You have credited the payables with the higher amount. Account payable is a liability, and liability increase credit, which means if you have credited the account payable with the higher amount, now definitely in order to adjust this transaction or the error, you need to subtract. And this adjustment will also be made in the control account. So the same treatment for the purchase daybook. Okay, the fourth and the last one, that is the purchase return daybook or discount received. The same treatment will be followed. Is overstated. Now what will be the accounting entry for this one? Accounts payable will be debited and purchase return or discount received will be credited. This should have been recorded. Okay. Now if that particular accounting entry is being overstated, which means you have debited the payable with the higher amount, and account payable debit means you have reduced the amount of liability. So you have reduced the amount of liability with the higher amount. You have reduced the liability with the overvalued. Now what will be the treatment for this one? You have deducted the payable with the higher amount. It means now you have to add back. You have to increase the amount of payable. So the treatment would be adding up, and definitely this treatment will also be made in the control account. So again, the same treatment, the sales return and the purchase return treatment would remain same. So this was the summary. Okay, but that's not the end. We all know that it's not only necessary the examiner might test you for the overstated amount. It could have been tested for the understated, but you're not supposed to remember, or you're not supposed to memorize all the points. Otherwise, you will not be able to memorize any point. If you will try to memorize all the rules, you will not be able to memorize any rule. So what's the principle? What's the outcome? Just recall or just remember these two principles. That if the sales day book has been overstated, what would be the treatment? If sales return day book is overstated, what would be the treatment? Same principle will be applied for the purchase day book and purchase return day book. So you're not supposed to recall or to memorize this one as well. You're not supposed to memorize this one. Same principles will be applied. And if the examiner will ask you for the understated amount, that sales day book has been understated, it's common sense. If the overstated is being subtracted, the treatment is to subtract. So obviously, if the sales day book is understated, so the treatment would be reversed. That means it will be added back. So you just need to remember the one principle, that is the overstated. You will remember that one, automatically you will be able to solve the situation for the understated. So that was the summary, that how to account for or to adjust the errors related to the book of prime entries being over or understated. I hope this video was useful for you. Thank you so much. Keep watching. Inshallah, we'll meet you in any other video. Allah Hafiz.